17th of July 2023. Nice to have your company. Let's dig in, shall we? And start, of course, as always, with our potential gold trade, which, of course, is a London Open breakout trade. If you haven't been with us before, just missing something here. Just hang on 2 secs, guys, and I will catch up. Still missing. There it is. Okay, happy days. As I was saying, if you haven't been in Trading Buddies before, welcome first up. And second up, here's what we're trying to achieve. We're trying to achieve catching the breakout of Asia session, basically, using gold versus the US dollar on the 1 hour chart as our prime objective. So what we do is we find the low of the range. The range starts here on the second candle of the day, which is Asia, equivalent to the Asia Open. And we find the low of that range, which is this low here, and the high of that range, which is this high here. Of course, the current bar counts if it is higher or lower than the previous low or high. Hi, Paul P. How you doing, mate? Can't see my charts. Son of a gun. Let me try again. In the famous words of Frank Sinatra. Probably the only one in the room who knows that. So, let me try again. Here's the first of our session candles, if you like. So that's the beginning of Asia session. We look for the low. There's the low since then and prior to now. And there's the high since then and prior to now. If the current bar was higher or lower than either one of those highs or lows, it would be counted as the high or the low. So what we would do is we'd place a buy order above this candle, above the high of that bar, and we would put our stop loss below the low of that bar, and we would also place a short order below the low of that bar with our stop loss above the high of that bar. If one of them triggers, we would cancel the other. So, in other words, OCO, one cancels other. Now, we're trading this at 0.25% maximum because we've only been trading this for probably 4 months. And that's not enough data yet to prove it is 100% reliable. Now, of course, it doesn't work every time. Nothing does. And we'll go through last week's results in a tick. Actually, we might as well do it now. We've got a minute and a half to go. That was Friday, Thursday, Wednesday, Tuesday, Monday. Looks like a shocking week for it, although this one would have worked, I think. So the low would have been here before 9. Yep, that's the low. And the high would have been here. So actually it would have been okay there on Monday. Had you traded that? Was that Monday? Monday, Tuesday, Wednesday, Thursday, Friday. Yep. So you should have done okay with that one. This one, mind you, we've got to take profit, right? That's the whole idea, is to take profit at our pivots at the moment. This one, well, that would have worked. This one, is that the 9 o'clock bar? No, it's not. That's the 9 o'clock bar. So you would have been short here. You would have got trampled with that one, with the news. Shouldn't trade the news, by the way. That one wouldn't have been any good. And Fridays also wouldn't have been too much good, I don't think. There's the low. Sorry, there's the high. There's the low. So you get taken into the short. You're still in the short. Actually, you would have done okay. So it wouldn't have been a bad week, providing you take the profit. You have to take the profit. And the profit today will be at DR1 for the long and DX S2, which will be the weekly pivot pretty much. We'll use the weekly pivot as our target for the short. Okay, there we go. We can place the order. And I'm on the wrong account. I've got to trade the gold account. Give me 2 secs. What's the one? So we'll place the short, and we will go short at 1950.90. 1950.90. Again, maximum 0.25% on this, guys. 0.25% on this account is, I think. 0.15, I think, is 0.25% or thereabouts. I haven't got time to work it out. And the stop loss will go above that candle at 1956.90. 1956.90. Why is that giving me that number? 1950.90. Didn't work, did it? Right, entry there, 1950.90. Stop loss, 1956.90. And the take profit will be the weekly pivot, which is at 1943.90. 1943.90. Right, that's the short taken care of. Why can't I place that? 1950, 1956. It won't let me do it. What's going on? Margin, that was it. I had the wrong number in there. All right, so the short's sorted. The long will pretty much be the reverse of that. It'll be a buy stop. Same risk. At 1956.90. And the stop loss will be 1950.90, wasn't it? Yep. And our take profit will be DR1, which is at 1962.25. 1962.25. Righto. Both orders are now in the market. And as I say, if one triggers, you simply cancel the other. Right. Let me allow these two people into the room. There we go. Check that we're going out on the stream. It's all good. Happy days. Right, guys, that's the gold trade. If you've missed it, you haven't missed the entry, but if you've missed the parameters, it's the high of this bar as a buy, low of this bar as a stop loss for the long, and the reverse for the short, taking profit at the weekly pivot, or DS2, and DR1 for the buy. Righto, let's catch up with my trades from last week. Now, we were short dollar CAD, and we were short dollar CAD for, we're now out of that, by the way. Sadly, I've got to say, well, not really sadly, at the end of the day, we traded this bar here, and we took first profit around about here. We took our second profit around about here. Couldn't update these over Friday and Saturday because I didn't have any internet, guys. But you should have taken your second profit here. And I was trailing my stop loss down to, can't remember where it was exactly, but it was entry. That's right. Stop loss. Oh, no, it wasn't. It was below entry. It was down here above this bar here. And I don't know why, but that's been taken out on spreads by the look of it. Stop loss was here, and we've only just been taken out of that. So 3 lots of profit on that taken, so that's reasonable. Sad, however, that we're out of it now on that big bar that took a fair chunk of our cash that we'd already earned back into the coffers of the broker. That's not where we want it. The other trade that we were in last week is oil. And, of course, that's why I can't see. We haven't been taken out. I'm on the gold account. Sorry, guys. I think we're still in dollar CAD. The other one is oil, and that was our take profit for TP1 on oil. We traded this bar here, and you should have taken first profit here. Stop loss is now at entry, so that can be a winner only. Just depends on the size. And I think that was all that we had in the market last week. So that's going just fine. Let me go back. Oh, I can do it on here, can't I? Today, what are we looking at? There's a couple of things I was looking at, pound Kiwi and Euro Kiwi. I decided Euro Kiwi was the better of the two. But I didn't trade it. And the reason I didn't trade it is because of that dotted red line right there. It's a pretty good slingshot setup for a short, but well, I'll go with why it's a good setup for a short. Got a double top sitting here. You've got a lower low, a lower high. You haven't got the second lower low. That's the only thing, but that could be created by a burst through this buyer bar here, and that would be the setup. There's a warning here with a slingshot candle pattern. There's a second warning with a second slingshot candle pattern here. And this one could be the trigger. It may not be, and it's not the one I want to trade because of that red line. Why is that red line so important? Well, if I go to the monthly chart, you can see the form that this red line has. It's been strong support here, strong support all the way through here. Then it became resistance. Then it became resistance again, resistance again, resistance again, resistance again, support here for a short while, and recently resistance, which has been broken. And here's the problem. The resistance has been broken and retested. Do I now want to go back in at that former resistance, now potential support area? Answer is no, I don't. So for that reason, I can't take that trade. However, if this double top holds and I get a lower high in this vicinity, then it becomes a trading opportunity because I can take profit before that support line. And that's important. So that's still on the cards, as is pound Kiwi. It's exactly the same chart. So there's no point going through that again. The only difference is one's the pound or one's the euro at the end of the day. They're both the same. I have about 2, 4, 6, 7 weekly game changes. I suppose we could quickly go through those. Let's get rid of that. Weekly bar on Aussie yen, suggesting that it's a buy. It may well be, but to trade it here long is, in my opinion, not a great idea. Do have the three amigos, which played out, but only till it hit support. And now we're coming back to test these highs again. I suspect that we may find a bit of trouble getting through those highs. And for that reason, I don't want to take the risk of that bar trading into this and this. And if I do get that to go beyond the highs, fair enough. It's not going to bother me too much to have missed it, but I'd rather stay out of that until that is broken or that high is broken. Really, I'm looking for a lower high here to trade it short, if I'm honest. Swissy yen, couldn't really argue with the directional bias here, could you? The trend is so strong, but I can argue with where I'd enter the market. It's way too high. Looks a bit overbought to me. yes, the direction's probably correct, but risky trade at that price. Euro pounds, a little bit of a range there that we've been in for the last month or so. And why would that break now? I've got no reason to think it will. So for that reason, I don't want to take trade. Euro yen, very, very similar to Aussie yen and Swissy yen to a degree, I suppose. We did see a little bit of strength in the yen for, well, a week and a half. Did it last that long? Maybe it can kick a goal. I don't know, but it's very, very difficult to trust that currency, to be fair. And you would think the directional bias here is probably correct, but I've got no reason to trade it long here. It hasn't retraced to a support level. You would think that maybe they'd want to have a look at this level here. They haven't. And I wouldn't be trusting this to go long into that high. Doesn't make any sense to me. So again, it's a no. That's Euro yen. There are a couple more. Pound versus the Kiwi, as I said. Very, very similar to Euro versus the Kiwi. Lovely tweezer top sitting here. But that red line, once again, is very, very, very crucial. And as you can see, it's got perfect form through here as a resistance area and a support area. Is it going to be a resistance or support? I don't know, to be fair. And I wouldn't want to be trading on the same basis as Euro Kiwi. It's just too tough here. Break it, retest it, different story. Gives me a lower high on the back of the double top or the tweezer top. But at the moment, you'd be trading a candle pattern in the wrong. Well, it's not really in the wrong position in terms of the resistance area, but it's trading straight into support at this point. So no, let it break and retest. Kiwi versus the Swissy. Yeah, look, it's a one candle reversal, but it's really in a great spot, if you ask me, where the triple bottom has been smashed, grabbing a bit of liquidity perhaps down here. And it would not surprise me in the least if this took off. Can I trade that with any confidence? No. But a higher low in here, once again, would get me interested. If you fancy a real speculator, I'd say this is probably the one that would be the best to speculate on, Kiwi versus the Swissy. But it's a high risk, extremely high risk trade. Now, it's kissing cousin. Kiwi versus the yen is in a completely different situation, as you can see. At the top of our chart versus the bottom of our chart. And again, for the same reasons as I've mentioned on the other yen pairs, really, really tough to trade that long here at these levels. The price is just too high. Not suggesting it can't, of course it can. It's also preceded by a high test bar. When I see a high test bar followed by a low test bar, it gives me the creeps. And I go, no, don't want to touch that prickly pair. It's going to hurt. And for that reason, again, I'm not going to trade it. Look, these game changer bars, the weekly game changer bars, do give you a good directional indicator, if you like, not necessarily a trade. So I'm probably expecting this to break this high, but I can't trade it here. If we got let's say we got a false break well, I'll go to a daily chart, much easier to show you. So I've got a false break of that area there, and I had plenty of room to take profit before this high. That would make sense to me, but it doesn't make sense to me to go in here. And the same could apply on a 4-hour chart. If I've got a false break of support down here somewhere, or even down here, then I've got tons of room to take profit before I hit that high. As it stands on the weekly chart, I do not. What else do I want to show you? I want to show you euro dollar. And I spoke about this at length. Was it last Monday? I think it was. Maybe the Monday before, maybe the Thursday before. I can't quite remember. But I was explaining to you guys that it was now time to think about this monthly false breakout, which couldn't have, as I said at the time, couldn't be any clearer to me what may happen next. And sure enough, that has been triggered at this point. Euro dollar, I think you can follow this for quite some time, frankly. Getting into it, of course, is the challenge. If you're not in it already on the monthly chart, then you're probably going to have to wait for a pullback. Where that occurs, the weekly pivot would be good. If we got that in the next couple of days, I'd be happy with that. But alas, you may have to wait till next week till this gives you a bearish bar, in which circumstance I would place another long above that with my stop loss below it, or maybe give it a little bit more breathing space. But given the state of the dollar, and we spoke about this on Thursday, we felt, both Ash and I felt, that there was plenty of room for this to continue its downward spiral. It's not even a spiral. I mean, that's a cataclysmic waterfall, as I see it. Do we expect a pullback? Yeah, I guess we do. But I think this one can be traded for some time. This may well be a precursor, if you like, to what the dollar has ahead of it. Maybe it is the real deal. I don't know, where this just continues to catapult. I'm not going to say that's not the case, but I am going to say that this, in my humble opinion, has got a long way to fall. So I'd love to see a retest of that level, and trade things like the euro, things like just about anything, oil, gold, silver, Aussie, Kiwi, CAD, you name it. I think you're on the right side of it if you are short the dollar at the moment. May have to withstand a few retracements as news comes out. That's the only thing. I think that's where I'm at, Ash, at the moment. How you doing, bud?
Cool. Yeah, very good, mate. Very good.
That's the shot. How was your weekend?
It was all right, mate. I'm still just trying to recover from just an all-out kind of feeling of tiredness. I'm trying to get to bed a bit early, but actually it's not helping. I went to bed earlier and I felt worse.
I find that, Yeah, I find that.
It's almost like you're better off keeping on going because you're running on whatever gas you're running on. But I felt really tired the last 2 days. Let's say I went to bed earlier both nights. Actually, I woke up really early this morning, but the night before I went to bed early, and I felt just drunk when I got up. So
you're doing it in reverse. You should get drunk and then go to bed.
Yeah, I wonder if that would help. But yeah, market's interesting this morning, mate. There was, I should say, some data from China which suggested that there was a bit of a slowing of growth, and it appears to have affected the whole region, and the region's currencies. If we kind of look at if we look at what's going on with some of these currencies, now I've taken an Aussie yen short, which I will get to in a minute. But so market's opened up and it has started to collapse a little bit. If we look at the Aussie, we look at it on a what's going on there? Yeah, they're okay. If we look at the Aussie, then we can see that this is today's bar. This is starting to ease the downside against the US dollar. Look at it against the CAD, same thing. It's kind of coming down a bit against the Swissy, against the yen, which I'll get to in a moment because I have got a position on that. Against the Kiwi is a bit more difficult, but so Kiwi and the Sing are both really kind of being negatively affected as well. The CAD Sing just easing its way to the upside. Swissy Sing easing its way to the upside. Euro Aussie easing its way to the upside. So Euro Kiwi as well, same thing. So it looks like the Asian currencies are, they've been a bit more affected by what's going on in China, because as I say, there's been a bit of a slowdown. There's been a bit of a dip in the GDP numbers. So year on year, I think it was above Q2 was above the previous quarter, but below estimates by a whole 1%. Sorry, that's year on year. The quarter on quarter number slipped from 2.2% to 0.8% growth. So there does seem to be just a bit of contraction in that market. Retail sales were down as well. we already saw some data really coming out from China, which suggested maybe some disinflation at best, but we could be heading for some deflation as well. So the numbers are looking like they might be having a bit of a knock-on effect so far this morning. It has pushed me towards as I say, the Aussie Kiwi, Aussie yen for a short, which I'll show you, but I don't know whether the particular price point is going to be available now or not. Might be able to kind of manage it in a minute, but we'll see. But there's other ones that I think are also interest. So this is the Aussie yen that I've taken to the downside, and I'm just aiming to get to this shelf down here, but there might be a little bit further to go. Not sure whether that's definitely the line. But given what's going on there with that support level, I've just figured it might be relatively tight this level. So I'm not aiming for a lot, but a 2-to-1 trade if we can get down to that particular area there. You can see a lower low and a lower high. Does this continue? Difficult to know, of course, but with that China data, it seemed to have helped a little bit this morning. And it really does depend on whether we are in risk off scenario or risk on. And the summer months,
certainly,
yeah, the summer months tend to kind of favor the yen. That's the interesting thing, when we're sort of going into particularly the course of the next 30 days, the yen does get some favorability. And I like the I like the Kiwi yen as well for some downside, mainly because I like where it is. If I'm sort of like considering, and when we saw some recession numbers as well from New Zealand last week, so we've seen recession numbers from New Zealand. Then we get this kind of China data, which suggests further contraction in the area. That's probably not going to help the situation over in New Zealand. So you'd suspect that there could be some weakening. Of course, Japan's in a similar region, that they are also in Asia, so they may also be affected. But I like the chart on the Kiwi yen. There's another drip to the downside. It's taken out. Has it taken that level out? Probably not actually, but it's definitely taken this one out. Seems to return back beyond the level, but anywhere between this zone and this zone for me is now a sell zone, and it does need to clear the pivots, which is so far struggling to do. But I like the Kiwi yen for some downside. We saw some weakness in the Nasdaq towards the end of last week as well. But I'm not sure whether that's going to continue or not with the Nasdaq. If we have a quick look at it, we can have a look at it on the US. So a little bit of weakness with the Nasdaq right on top of this horizontal level here. Right on top of that. And this touch here. So that weakness is suggesting that we could get a little bit of retracement. I wouldn't be surprised at all to see a double top before we really do start to come down hard. The Nasdaq has just been unleashed and untamed, and it doesn't seem to want to come down. Earnings season is front and center. I think that the thing with the Nasdaq and the S&P actually, if you compare the Nasdaq with the Russell 2000, it's very, very different. The Russell 2000 really, you could argue, is in a downward movement within a range of a downward movement. It hasn't really done quite what the Nasdaq and the S&P has done. If you have a look at the S&P, well, in fact, let's have a look at the S&P. S&P done something similar to the Nasdaq, where it looks like on this weekly chart we are right on top of this horizontal level, and looking maybe to kind of come down from this particular point as well. Tested it, could come down, but again, no different. If the Nasdaq pops up, then this one could also see a double top before it starts to come off.
Third Monday of the month.
Third Monday of the month. Third Monday of the month. So you'd be looking for a bit of positivity, wouldn't you, with the S&P? And it might well climb back to the highs. There's nothing else really in the way today, and it's difficult to know what data point is going to shift the market bias. I think there is enough weakness for something to actually appear like the economy snapped. but I don't think it's snapped. I think it's probably there's this slow corrosion kind of going on, and we haven't seen the data which kind of says this is where we are. You know, I think that the data sort of like seems to be taking a little while to actually permeate through. There might be a bit of profit taking purely because traders don't want to buy into earnings season. You know, Microsoft is out on the 27th, I think, of this month. We've got the Fed as well next week. So there's quite a lot for market participants to get through if they're going to hold on to positions that really have seen very little pullback. And you'd be looking for something, at least a 5% pullback before resumption of the trend. But there is no reason at this stage to suggest that we're not going here, because that data point hasn't yet come out that says we are, you know, in a lot of trouble. But if you look at the Chinese numbers and you look at some of the ISM numbers from the United States, it is suggesting corrosion. What they are all suggesting as well is that the corrosion is only going to result in a soft landing. And that is going to be the shocker for the market if it turns into a hard landing. I just don't see how it can't. I mean, you know, the numbers in some areas that they seem to be very, very poor. In other areas, they seem to be very, very strong. Something has to give. And the Fed aren't really kind of taking their foot off the gas. I don't think with any real commitment. So you would think that what would give would be to the downside, particularly where prices are, because of where prices are. So I am looking for shorts, and again, that pushes me towards the yen as well. So I'm really watching the yen right now, mate, because I think there might have been a little bit of a shift in the way that traders are thinking about it. We have seen some strength start to kind of come through. The yen had been very, very weak, and it kind of makes the most sense.
Forever.
Yeah, it makes the most sense to say, well,
it does, because as you know, and we all know, that it can only go in one direction for so long.
Yeah.
And eventually, especially currencies, you know, they have to revert to the mean at some stage, or towards the mean.
Yeah.
And, you know, if something's at an extreme high or an extreme low, that's exactly when you want to be looking for it.
Yes, exactly. And that seems to be where the yen is. You know, it kind of it also reached a double top against the Aussie, and I think you pointed out that these areas haven't yet been tested. So I would be looking for that little bit of weakness. Gold's an interesting one. You know, I know you don't really favor gold, and I'm sort of I'm a bit 50-50 on it myself. When you look at the weekly chart, this would just suggest that all we've done is retrace right up to the resistance point. And as we were talking yesterday, we talked about the fact that you look at gold against almost any other currency. You weren't able to bring up the pound, mate, but this is the pound. This is gold versus the pound. I mean, that's bearish.
That's a weekly chart.
That's a weekly chart. Yeah. That's not bullish. That's bearish. So gold is actually.
Where's the lower high?
Yeah. Well, yeah. This is against the Swissy. And when you look at this is gold against the euro. And we know what it's like against the dollar. Gold against the Aussie, not quite as negative against the Aussie, but still, you know, it does look a bit bearish. So the narrative with gold, if you focus on gold versus the dollar, does look pretty bullish. You could make the case to say it's pretty bullish. But you look against many of the other currencies that we've got listed here, not quite the same case to be made. You know, it's actually a little bit bearish against that. So,
there's a couple of conclusions to draw from that, right? In my opinion, anyway. If you're talking currencies, then everything except the dollar is in favor against gold.
Yes.
Everything.
Yeah.
Therefore, logic would lead me to exactly what I said about the dollar index. I think it's in trouble. How far it goes is a really good question. But I think you can trade just about anything against the dollar at the moment and do okay. You've got to have your setups and you've got to have your retracements, most definitely. But I think you're on the right path.
Yeah, I guess that the question with the dollar is what is going to enable it to reverse its course. And at this stage, we've got central banks, I think, expected to raise interest rates, or certainly the Fed expected to raise interest rates, and still the dollar is weakening. There seems to be this pull against action, the actual action of the Fed, and what the market believes is going to happen, because the sell-off in the dollar has been pretty extended, and I guess what you were saying before about things going in a specific direction. Well, we maybe so you can see the Aussie is up against the dollar, but that's still got lots and lots of room to run. You look at it against the pound. I suppose it's got a bit of room to run as well. If you kind of go back to 2021, that's got a little bit of room to the upside. But I suppose it was because of this. This is what probably has caught a lot of the dollar bulls off guard, is the fact that the dollar strengthened to the extreme. And really, maybe what you could suggest is what's happening now is maybe not such a bigger danger in the dollar as we've been talking about, because maybe all that's really happening is that we're going a little bit, reverting to the mean. You look at this chart on the monthly. The pound actually looks quite.
I've got to go for 2 seconds. I'll be straight back.
No worries. The pound actually looks quite low against the dollar here, and it looks like if you were sort of going for the mean, you'd probably say that looks around about the middle zone for the pound US dollar, around about the 142 level. So just because we are going heavily to the upside, is it not just that we're reverting back to the mean, and actually we know what happened down here was so extreme, the move in the opposite direction was going to be quite extended, and it needs to be quite extended. It's possible. Dollar CAD probably closer to the middle zone. Dollar Swissy actually looks pretty weak. So maybe against some of these currencies, you suggest that actually what's going to happen is that quite the reverse, and we should be looking for probably some dollar strength ultimately, and that looks like it could go from 85 or 86 right the way up to 95. So it's certainly something of a 10% gain in the dollar versus the Swissy. The euro is always the interesting one, but again, you look at the euro, and is all it really doing just reverting to its mean? Maybe. It was low down here.
150.
150. 150. Well, that's a long way. But you look at it down here. That's low. That was proved to be low. This was low in the extreme, and actually, we're not that far away from these lows down here. So, is it that the dollar is in a lot of trouble, or is it that everything else is just now balancing itself back up again as we kind of get a little bit of calm after the last 2 years of COVID, hyperinflation, and now a kind of return? I don't know, but this would suggest that there's more room to travel to the upside. But I wonder whether the narrative actually is probably a bit more misleading than we recognise.
Yeah, look, I don't think we can probably know the answer to that question. To be fair, only time will tell us. And well, my thoughts on euro versus the dollar. I've been saying it for years, and weeks and months now about that false break to the downside on the monthly, and I think that's got a heck of a way to go. I really do.
Down here.
On the monthly chart, well, the false break that I showed you before from the low in December 2016 through the low in April 2020, I think it is, from memory.
Yeah.
That's just
break,
that's just classic in my book.
Yeah. So you're looking for a retest here and then looking for a long.
Well, should be in the long now.
Right.
That seller bar 2 months ago was the one.
This one, yeah. Would you consider an order where if it retraces?
Another one, yeah, sure.
Oh, you're in the long, are you?
Yeah, I am.
Oh, great. Oh, yeah. So you're looking for a big move. Okay, I get it. I get you. What's that doing? Yeah, that looks pretty good there as well. Well, I like that line. Coming through there, it gets a bit messy there.
Well, we traded that one as well. If you look at that line again, that was a false break to the downside.
Yeah, that's a really good line, isn't it? False break to the upside there.
Well, that's where we traded that short underneath that first buyer bar.
Yeah. And now we're through here. Yeah, I mean, any kind of retracement is going to encourage the dollar as well. Is one of those currencies that is looking for an extremely weak seasonal situation, and the COT data is not suggestive of bullish dollar. Still there are traders that are keeping well out of the way. So even with this sell-off in the dollar, we haven't seen investors come back in to buy it up. So the dollar does look like it's in a bit of trouble. And I guess depending on what that trouble is, will determine what happens to the likes of the S&P. Gold is interesting, but only against the dollar. So it sort of suggests that the dollar's, interesting rather than gold itself. As I say, that the Nasdaq and the S&P, you would think would get a boost because U.S. companies all of a sudden by default become a lot cheaper if the home currency starts to weaken, and there will be investors quite happy, if they've got a accumulating currency to go and buy S&P. And Nasdaq stock and reinvest that money, and then when the dollar switches around again and becomes a more valued currency in comparison to the home currency, then that's when you start to take your profits.
Okay, so you're not of the same opinion I am, and like I said, I don't know that this is the time. It probably isn't the time, but if it is, that's all well and good. That the dollar does disappear, which is my thesis, right? And many other people's thesis, not just my own.
Yeah.
This is not now, or are you on that page, or do you think it will survive?
No, I don't think it will survive as we know it. I suppose the CBDC is the caveat. So. The dollar as we know it, I don't think is going to survive. I think that's almost done within the next decade. I think it is definitely done. The question is whether a CBDC is enough of a difference for people to say that it's replaced the dollar, or whether people are sort of wrapping that up within the same currency because they're saying it's the American currency which is actually going down rather than the US dollar per se. I suppose that would need defining, because I do think it's done. I do think we're probably finished with the dollar, but it's whether it transitions over to a digital dollar or whether it becomes a whole different currency. Whether it's gold, whether it's the yuan, whether it's the euro, whatever it is, whether it's Bitcoin, which I see as an impossibility. But whatever it is. I think that they are almost different arguments, but the same thing at the same time. It's sort of a death of the dollar does say the CBDC, but it's kind of the same currency, depending on how they deal with it, depending on how they structure it, I suppose. But I think
it's the same system. Nothing's really changed in that regard. You're still going to have a situation where something's dominant. Yeah.
Well, you're still going to have a situation where the US's currency is the dominant force. And I guess is that really what people are saying, is that we are at the end of the US dominating the global currency. We're end of the US being the reserve currency. Yeah.
I definitely think that's the case. And it's very easy to be wrong in these circumstances because we're in I guess a zone that is very uncertain. There's no question about that. But to me, it's pure logic that with the BRICS and the CBDCs and all these sorts of things going on, and that's not going to go away. That's only going to gain momentum because, especially in the eastern part of the world, where they hate the United States, number one, right? And they'll do everything they can to get out of their grip. if they ever were in their grip, and I guess they were, but they've been bolstering stocks of gold for so long. They bought up the dollar, so they probably own more dollars than the US. I don't know. It's just
the question, though, mate, is because if something is going to take over from the dollar, whatever takes over from the dollar, let's say theoretically it's a country, so a different country's currency takes over from the dollar, that is reliant on all the other nations, or the majority of nations agreeing that they trust the country, that they trust the new system, and it takes a lot to change a system. So right now,
it certainly takes the major trading countries,
like India.
Well, yeah, like India. No, I mean, that's the prime focus, I would have imagined, at the moment, because it's just exploding out of, well, not out of all proportion, but certainly disproportionate to what we've seen, except from China, I suppose, in the economic growth. This is China on steroids, though, I think. I think we're seeing early days.
To a degree. To a degree. I mean, we actually saw some pretty poor numbers in exports from India recently, and interestingly, the United States probably are quite happy for India to start to expand, because they then can, as much as possible, negate the risk from China. But because India aren't the same sort of superpower that China are, so if they can purchase from India instead of China, they're going to be a lot happier. But they're not going to be able to have the same type of commodities. Now, the United States has been buying refined petroleum from India, because they don't kind of work on they don't work on their own refineries. But if you look at the numbers, they've actually been depreciating, so that the trade has been depreciating. Now, the US is their biggest client, but trade has been depreciating. Now, that might be down to a lot of factors, but we are kind of seeing this potential for global recession kicking in. But then you switch to China. China are talking about controlling specific commodities, that while a little bit of a trade spat goes on, and that's all it is right now, a bit of a trade spat, but they always seem to be going on. But they control specific commodities that the United States just can't get hold of. So I would want to know how much trade goes through India that they could actually just do themselves. Because if you take refining petroleum as an example, well, they could do that anywhere. They don't need India for refining petroleum. They could do that in their own country. And in fact, they've got their own refining petroleum system over there anyway. Just there's not, they decided to outsource it. But when it comes to specific commodities that they need, how many have India got? Because we know China's got some, because that's surely in the end, they're the ones that really hold the power. The ones that hold the power are the ones with the raw material that the global economy actually needs to work. So,
well, this would explain a lot of things, and we've been aware of that in Australia for so long. When I say we, I can't include the government and those people who choose to sell all our resources to the likes of China, who don't need the resources in the number or volume that they've been purchasing over quite a few years. In fact, there's pardon me, as I understand it, a massive store of Australian coal in China, which also would explain why, and there's a few things going on there. And I don't know whether this is worldwide or just Australia. And the comment you made before, which was those who have the resources control the planet at the end of the day. Hence, China have 99-year leases on the most strategic ports in Australia.
Right.
The Port of Newcastle, which is the largest coal port in the world. So China controls that port. I think it's the same in other coal ports in Australia as well.
Mm.
So, they play the long game. They always play the long game, the Chinese. So it's not a case of if, but when that becomes a point of control, I suppose, where they flex their muscle and say, well, okay, we own all the coal in Australia, or we control all the coal in Australia.
Yeah.
Which is amazing and incredible. And if you think coal's going away anytime soon, I think you're wrong.
Yeah, I agree, man. This is why we have conflicts.
As much as we'd like to see that.
Yeah. But, we have conflicts in strategic parts of the world. Ukraine is an example of that. Ukraine does actually provide the world with a commodity that it desperately needs. So we have these conflicts in strategic parts of the world where superpowers will get involved because they recognize that, just as China are doing in Australia, if the other side control the supply, then they've got a bit of a problem, and I don't know when it comes down to what I guess what the United States own for China, where China needs what the United States have got, is really the commodity of money. I think that's probably the biggest thing, the wealth that they can pump into it to enable it to grow. But as times are changing and China aren't so reliant on that anymore. So there's the question of the dollar, I suppose, maybe comes mostly down to China than anybody else.
Yes,
because I don't know whether
India. Right.
No. Well, the only reason I'm not saying I wouldn't dismiss India, but what I guess the point with China is that India are maybe, I don't know this for sure, but I would have thought are more likely to sit on the side of America, Australia, the United Kingdom, the Western cultures, I would have thought. And that's from my limited knowledge. Whereas China obviously can split off and do their own thing. So if the question really comes down to, if you got a global split, who controls the stuff that makes the rest of the globe turn? Because if America can't get specific things from any of their allies, they've got to use, I guess the other side. I'm not going to call them the enemy, but the other side of the.
You might as well, because that's what it boils down to at the end of the day.
In a way, yeah, in a way, I guess it does. But then, they're not enemies because of trade. So they it's I suppose it's kind of maybe it's a respectful distance. I don't know. But if they decided to split, if there was this split, who would control enough stuff to survive without the other? And I guess that's what it will come down to. And in the end, it will probably be that country or that region that will determine what global trade, what currency global trade will be will be flowed with. Because at the minute we're assuming that United States, the only way the United States dollar can survive is if everybody needs them. And if they don't, because the other sort of side of it controls the important factors that the globe needs to work, then they will decide what global currency is going to be used for trade. I mean, like we saw in Russia, saying no, you're not doing trade in Russian oil with dollars. You're going to be doing it with in rubles for now on. But of course, they don't control the world's oil, so that ruble wouldn't be, the one, but it's the ones that really sort of,
But they're in there trying.
They're in there trying, yeah. But if there was a genuine split, where does everybody fall? And I don't know enough about kind of global allied dynamics to know, which country would fall on this side and which country would fall on that side, because it probably is a two-way thing. It's unlikely you're going to get kind of anything more than a three-way split when it comes down to which side that you fall on. But because I suppose I would assume that India would be on the side of the West because it's a democracy and, the way that their government's structured, I would have thought it would fall on that particular side, but I might be wrong. But the likes of Saudi Arabia, all of these guys, where do they fall? Iran, we know is probably unlikely.
Where they're talking. Well, as I understand it, they're in deep talks with China.
Right. Well,
and Russia
then,
and Russia.
well, that would suggest that they want to. They will determine.
So there goes your petrodollar. If they turn, there goes your petrodollar. Bang!
See,
how much is that going to hurt?
The Chinese, you see, though, might well be quite happy with the dollar. There might be a lot of benefit for them to have the dollar, and that's the other sort of like side of this. It's not quite as simple as these two are enemies. So this one's going to choose which currency, and it'll probably be their currency. Won't really kind of work like that. They will have a look at things and say, actually, it's to our benefit to have the dollar as the global currency, and we'll just peg against it and do what we need to do over here. They can control that. It's completely useless, really, when it comes down to power. So we'll allow it to kind of continue. I mean, there's so many dynamics here that we just don't really know. It's very difficult.
We're not going to be told till it happens either. So
no,
at the end of the day, you and I aren't going to solve it, and we're not going to answer the riddle. I wouldn't have thought.
No,
which is what it becomes. No. So the only thing that really we need to think and worry about is, just saw something on Euro yen, which I'll share in a minute.
Do you know what? And this really sort of can determine. It's interesting, really, when we sort of all sit down to trade. The determination of what time frame that you choose to trade really kind of determines also which news and which data points will be important for you. I was thinking about this the other day. It's so difficult, really, to mine through the big picture of what's going on in the global economy and what's going on with kind of global superpowers and how they trade, who's doing what. China will blame America for stuff. The United States blames China for stuff. If you live in the UK, it's all about Russia's the enemy. You live in I don't know which part of the world, but it's all about the UK and America being the enemy. And when it comes down to it, us poor lowly people haven't got a clue. When I look into our government's action, I'm appalled by what they do, and I'm appalled about their how almost open they are with it, but how much they get away with it. But I'm under no illusions that we're the only government with a terrible, with terrible leadership. I don't trust any of them. I don't believe any of them. I don't think any of them tell the truth. And because of that,
we've been seeing that in the past, 2 decades maybe, with populist voting, right?
Yeah.
Populism. And, there's a few had a crack at that. I don't know if they've had too much success long term, to be honest.
No, they probably haven't, mate. But the free press, they sort of, we have the free press over here. Well, if you read some of the articles that I read, you'd be sort of questioning how free the press is. It's so kind of like indoctrinated on one side or the other. But anyway, the point with it is that that because the news is the data's not difficult to sift through, but because the news and the opinions so difficult to sift through, we are better off in many respects focusing most of our time on forming a bit of an opinion, but ultimately, in the end, trusting the chart. If you trust the chart, the chart's not going to lie to you. It will tell you sort of like whether something's going up and down. Then you can determine, what do I need to see to trigger me in, to this position? How often, if I sort of like come down to probabilities and I come down to sort of like the equation of what I need to aim for to suggest how often this particular system works or doesn't work. Now, I'm not saying that you discard the fundamentals, because I say the data is different. But when it comes down to the stuff we're talking about, the US dollar dying or not, it pays no importance to us because because it can't. We almost can't get kind of swept up in that stuff because we don't know when it's going to turn, if it's going to turn,
indeed. Yeah.
and how it's going to affect stuff. So in the end, you just us lowly kind of plebs just have to kind of look at the chart and say, okay, what's the chart saying? What was the where's the data that might move this in this particular direction? What's the data saying on seasonals, whatever else? If that's what you choose to do, and trade it with a correct money management. So it kind of makes it a lot simpler when you do things that way. You know,
follow, not lead. We're not leaders. We're followers.
Exactly, we're following. Exactly, mate. Exactly. Follow the money.
Show me the money.
Yeah.
And at the moment, the US dollar is really my focus. And I have to preface this by saying that right at this very moment in time, the US dollar is still the reserve currency of the world. And therefore, world trade depends on the US dollar. And as much as I poo-hoo it and think it's an SH1T piece of garbage, it really is the most traded currency on the planet. And I don't mean that by speculators. I mean that by world trade. You know, people buy and sell goods in US dollars. So there's always going to be, sorry, always is a long time, but for the foreseeable future, there's always going to be people using US dollars and therefore buying US dollars. Yeah. And therefore you're always going to have retracements on big moves against it. Always.
Yeah.
And that's, I think, the focus that I need to have in the next little bit.
Yeah, I agree, because
is wait for those retracements.
Yeah, if you look at what's happened to the US, the US dollar versus what were we looking at, the Swissy, let's say, just a huge collapse. In fact, just look at the dollar index instead. Just a huge collapse to the downside in dollar index, and anybody that's calling for this to go down to zero in one foul swoop is kind of missing the way that we should be looking at charts. You look at this and you say, there's a breakout. Now, most often, we haven't even closed this position yet. This is a monthly bar. So the likelihood from this particular point in your years of trading is to find yourself a horizontal level, which is there, which we're right on top of. And then we say, okay, well, what are the bulls wanting to do? Well, the bulls want to protect this. The bulls don't want this pattern to break down. And with last week's bar down there, the most obvious position from here, to my mind, is back up to try and get back inside the bullish zone. That's what this is suggesting at this stage. Now, it might come a little bit lower, and it might take a little while longer, but this is the zone that they're going to try and protect up until August the 1st. Or July the 31st, because then there's going to be battlegrounds. Now, we don't know when it's going to turn. We don't know whether it's going to be this week, next week, or a day before. But that is going to be the idea. That's the way I would be thinking about this. And then it's sort of like thinking, well, where's the reversal? Well, there's nothing on the daily. You got one bar on the daily. What's that on the 4 hourly? Well, what we got on the 4 hourly, at least now, is a level of resistance that it's got to get through before we become interested. That's the way I look at this, mate. Anyway, until we get through there, nothing's of interest.
Yeah, well, I agree, 100%. No long, no short.
Yeah, no long, no short. Yeah. I mean, it looks like we could bubble around, because the problem is you pick it up down here, which will look cheap, but you don't know whether it's going to go beyond that level first. You don't know, it might tip down and then come up. It might find that as the support. We don't know whether we got support. And the only time that we can confirm that we've got support, or at least confirm that we got something that is attempting to be support, is when we get the break to the upside through this area. And when that happens, then we have an area that we can certainly consider for a stop zone down there. So that's the signal for me. It's got to get up.
And it's rinse and repeat, isn't it? At the end of the day, that's always going to be the case.
Yeah.
And no matter what's going on, the chart, as you say, doesn't lie. It will do that time and time again. And if it doesn't do that, then you don't trade it.
Yeah. Even if we think that there are fundamental, seasonal, and COT reasons to be buying the dollar, even though I would think that would be the case with the fundamentals, what we said about the Fed, what we said about the market maybe sort of over confident in their sell-off of the dollar, even with all that stuff. Until other traders agree with me and give me sort of like something that give me a signal that they agree with me, I'm not touching it. I don't go near it. I've got the idea, I've got an opinion, but the opinion has to still be, in the end, expressed through the chart, which is why, really, charter technicians do so well without fundamentals, because I don't really need them in the end.
Yeah, look, if you're prepared to wait until the chart screams at you, and most people aren't, most people think, oh, there's a whisper. Maybe that, it looks reasonable. Let's have a crack at that.
Yeah.
And instead of waiting until it's actually screaming at you to go in and take that trade.
Well, I was talking to.
I'm hopeless. I fall to that temptation most often.
Yeah, do you know, mate, I was talking to some of the guys in a coaching session last week, and I was saying to them, realistically, my base case is really to try and aim for one trade a week that makes 2%. Because if you can get that, it doesn't always work out like that, because you might take the trade and it loses, and then you've got to go back in at some point during the week. But if you can get your one trade a week at 2%, you've got 8% a month, and you're trading 4 times a month. And the good thing about having that attitude, that I've found anyway, is that you are really trying to be as selective as possible, because you've only got one trade you need to take. You're only aiming for one trade. So you're sort of like going, okay, is this the one? No, it's not. And what you're just saying about screaming, is this one screaming? No, it's not. Well, I won't touch it, because that's not the one I like. So you're really waiting for that kind of bargain. I guess you're the tiger in the long grass, waiting for the easy kind of slightly injured bison to kind of wander past, looking at the sky, rather than the huge buffalo that's got his horns sharpened. He's just been to the sharpening shop and had his horns sharpened, and he's kind of
and
ready
if there's
to go.
not one, that's a great idea. I'm going to start a buffalo sharpening shop. Right.
Yeah.
There's the entrepreneur.
Yeah. So that's
you got any
that's
trades?
what, Well, that's what that's what I was looking at the Aussie yen, mate. That's what I was looking at the Aussie yen. To me, the Aussie yen is my potentially 2% trade.
Yep.
I've got a lower low. I've got a lower high, which came right back into this area here, bang on the area, and that's on the daily, and then I like to go down to the hourly. Oh, sorry, that's where my stop is. Then I go. So my stop is usually on the high end of the test. Up there is my stop, and then as it comes down, I'm just looking for the hourly to kind of give me that lower low. Sorry, the lower high, which I got there. I was a tiny bit late, but I got it there, and now we're off and running, and then I can aim for my 2%. And if I don't make it on Monday, the good thing about doing it on a Monday is that you got Tuesday, Wednesday, Thursday, Friday, Saturday. Tuesday, Wednesday, Thursday, Friday, if this trade ends up losing. But at some point I can manage this, and I can put this down here and not risk my 1% anymore. But I don't think it's ready quite yet.
Yeah, okay. Look, I really haven't got one. Lewis likes Aussie CAD for a short. You got an Aussie CAD chart there?
Yeah, Aussie CAD I like as well. I think that's fair. I think anything against the Aussie right now is okay. I did see this Aussie CAD. Yeah, that looks good too. On the hourly, this would be a setup for me. So I might well take this. What's the dailies? The dailies are, daily's got resistance. Daily's got resistance. The 4 hourly is a bit rangy, but the hourly looks good to me. I actually really like that, mate. I might have to have a closer look at this in a bit. Just having a look at the I think the only thing that is going to keep me out of that is that I've already got an Aussie trade on.
Yeah.
There's the Aussie Kiwi. Not yet there. I like it. I do like it. I may not take that because of the Aussie. So I'm gonna have to. I'm just gonna have a look at the CAD as well. Dollar CAD's going up, so Aussie dollar looks like it's slightly stronger than the Aussie CAD, but that's come down a bit. Let's just have a look at the CAD. Yeah, CAD's not looking great. I like it apart from the CAD part. I like the Aussie bit, just don't really like the CAD bit.
Yeah, that looks a bit interesting, doesn't it?
That's pound CAD. The CAD just doesn't. It's not really doing it, is it? Yeah, nothing else today, mate. Oh, on the daily, okay. Oh, well, that's the pound CAD on the daily. Yeah, it could reverse. Dollar CAD. I'd need to see more. If I'm on the daily, I need to see more. I need to see. Yeah.
Yeah, look, I'm going to be completely boring. I don't have something that I'm really keen about just yet. I've got to say. Okay. I think Euro Kiwi is probably my best opportunity, but it hasn't set up yet. I'm looking for a short there on Euro Kiwi.
Okay.
But there's no trade there at the moment.
No, agreed.
Gold breakout hasn't triggered. It nearly triggered short, but it hasn't. Euro dollar is all over the daily pivot, so my edges are gone there. I've got nothing to trade. I'm just boring, mate. Nothing to do.
Gold down to the monthly pivot might be of interest again. We'll have a look at gold again, but gold's a difficult one because you look at that on the weekly, very that's quite an attractive sell zone on the weekly. But it could still come down and hold, I suppose, on the monthly pivot. If it does hold the monthly pivot, it might be something on gold. But again, we talked about gold, and it's really the dollar that's weakening rather than gold strengthening.
Yep, I believe so. All right, well, let's get out of here then.
Cool.
If we can't make any money, we might as well get out of here. Keep our money in our pocket.
Yeah. Right. Keep it there.
Now, folks, this is the last Monday show until the 7th of August. So Ash and I are having 2 weeks off. We will be here on Thursday, but that will be the last Thursday show until the 10th of August. So last show for 2 weeks occurs on Thursday. Gold still short till early August. That's Lewis. Mate, can I be your accountant? You must be making truckloads.
Lewis is a bit of a gold king. I think we need to get him on the show to give us a bit of an analysis of gold on a monthly basis at least.
100%. All right, listen, guys, have a great week. As I said, I'm a bit boring. If you're in my ultimate slingshot group, I'll try and find something. But like we just said, if it's not there, it's not there. And I just don't have anything for you at the moment. Simple as that. Have a great week, Ash. Catch you Thursday,
yeah, you too, buddy.
Bye, everyone. Have a great week. Bye-bye.